So hello. Welcome to our next chapter, that is your IND AS 34, that is your interim financial reporting. So as the name suggests, interim financial reporting means making your financial reports in the middle of a year. That means not at the end of the year. So let's start. What is your interim period? Interim period is your financial reporting period shorter than a full financial year. Your usual financial year starts from 1st April from 1st April and goes on till 31st March. So if we are making the financial statements for a period that is shorter than this, that is called your interim period. Your interim financial report shall include your condensed balance sheet, P&L, changes in equity and cash flow. That means 4 items. First is your condensed balance sheet, your profit and loss, changes in equity, and fourth is your cash flow. Any significant events shall be disclosed separately. Any significant, say for example, any inventory write downs, any acquisitions and disposal. That means if you purchased any asset, if you sold any part of your business, any litigation suits going on, all of that are your significant events and these need to be disclosed. Okay. Now the periods for which interim financial statements are required to be presented. Okay. So as we studied over here, you have to make four things. That is your balance sheet, P&L, changes in equity and cash flow statement. So these are your four. That is your balance sheet, your P&L, your changes in equity and your cash flow statement. So for balance sheet, it is end of the current interim period. Of course, balance sheet is made at the end. So whatever your interim period is, say for example, your interim period is from, let's give this years. If it is from 1st April, say for example, 17 to 31st July 17. So in such a case, end of the current interim period, that means you will make the balance sheet at the end of 31st July 2017. And what do they say? End of immediate preceding financial year. What would be the immediate preceding financial year be? Immediate preceding financial year would be 1st April 16 to 31st March 16. Right? So you'll have to make balance sheet. First is on 31st July 17 and you'll also have to make balance sheet as on 31st March 2016. Okay. Next is your profit and loss. So profit and loss for the current interim period. That is your interim period from 1st April 17 to 31st July 17. Next is cumulative for current financial year to date. That is your current financial year to date. So of course our financial year in this case is starting only from 1st April 17. So it will be your cumulative. And next is your comparative P&L for comparative. That means if you are making from 1st April 17 to 31st July 17 is what is you are making P&L. So to compare, you'll also have to make from 1st April 16 to 31st July 16. You'll also have to make a comparative same reporting period of previous year because it is easier to compare. Okay. Next is changes in equity and cash flow statement. It is the same. That is cumulative for current financial year to date. That is the same part. These both are same. And next is comparable year to date period of immediately preceding financial year. So this is also the same. That means you will be making this. And first is current cumulative for current financial year to date. That is your this. Okay. So this was your items that are required to be prepared. Next, the questions were mostly part where questions are mostly asked from is your income tax expense. So interim period income tax, you also have to, because right now you have not paid income taxes. So you will have to calculate what will be your interim period income tax. So that will be your interim period pre-tax income. That means your income before any tax. Only the income of the interim period into tax rate that would be applicable. So let's do an example. Say for example, calculate the tax expense for each quarter if the gross income is 33 lakhs. Now what happens is this 33 lakhs includes your capital gain of 8 lakhs. So in such a case, you will first estimate quarter wise income. You will estimate quarter wise income. So say for example, your quarter 1 has 7 lakh, quarter 2 has 8 lakh, quarter 3 has 12 lakh, which includes 8 lakh capital gain. That means this is basically 4 plus 8, and your quarter 4 has 6 lakh. This information will be given to you in the question. So in such a case, your tax rate on capital goods is given, capital gains is given at 12%. On other income is 30% for first rupees 5 lakh, and balance income is taxed at 40%. So your capital gains is taxed at 12%. Your first 5 lakh is taxed at 30%. That means 1,50,000 is your tax, and your balance income is taxed at 40%. So in such a case, how do you calculate? All of this will be given to you in the question. What will be the solution? So your income other than capital gains. So 33 lakh is your total income. If you subtract capital gains, that comes to what? 25 lakh. Tax expense on this income you calculate. So first is 30% of 5 lakh, that is 1.5 lakh, and 40% into 20 lakh. So that is another 8 lakh. So this becomes 1.5 plus 8, that is your 9.5 lakhs. Now you do a weighted average, that if I'm paying 9.5 lakhs on 25 lakhs, then what is my percentage that I'm paying? So you are basically paying 38% of tax rate. So therefore, this becomes now easy. That is, quarter 1, how much is my income? 7 lakh. So clearly 7 lakh into 38%, and you get 2.66 lakh. Same for quarter 2, 8 lakh into 38%, you get 3.04 lakhs. For quarter 3, you have to subtract your income. That means 8 lakh. So we know 8 lakh, your capital gain is taxed at 12%. So that we will calculate separately. And your 4 lakhs will be taxed at 38%, and your 6 lakh will also be taxed at 38%. And this will be what will be the tax amount. And with this, we are done with this very small IND AS, and I'll see you in the next one.